Yogesh Mehta, PCG Advisory at Motilal Oswal Securities, joins us live now. Yogesh, good afternoon to you. Thank you for joining us. Yogesh, last week we were celebrating a new high on the Sensex, but I guess we celebrated early because this week Nifty is down by more than 200 points already.
Yeah, but it was the right time to celebrate the new high because we had a Diwali, the most auspicious occasion with the New Year. So on the Motor trading, it did breach that level. But now with new junk ratings and again further issues with the rupee and dollar parity, so all this put in together, and FI's buying was there consistent since last 1.5 months, and now it has been little tapered off for in between 2-3 days, and domestic institutions are also seller. And we have a rating downgrade yesterday that has impacted banking sector today. And FMCG is on a correction mode. IT has already done a run-up. So that's why we see some kind of, profit booking here at these levels.
Yogesh, what have you made of the earnings so far, and especially the PSU banking lot that we've seen, PNB as well as UCO Bank?
Yeah, the PSU bank, barring only one Bank of India, all other banks have done not done up to the expectation, and PNB today, the NPA level is still much higher, and provisions are also higher. So we think that PSU bank has given a little bounce back from the lows, but the sector as a whole will be in a dilemma for the next quarterly earning also. And growth is not that much visible. We can see some pressure here, so it can still correct further.
Yogesh, one can easily divide the IT space into two pockets, large cap IT and mid cap IT. Now the interesting bit here is that large cap IT stocks have struggled with the exception of Tech Mahindra, whereas mid cap IT stocks are moving from strength to strength. So for a medium term investor, do you think it's time to revisit mid cap IT?
Yeah, if you consider that on the valuation front, then mid-cap IT is still available, like we can call Tech Mahindra as a mid-cap also, and HCL Tech. So on the valuation front, still it is quoting at 12.5 times, 13 times this year and the next year as well. With 122 rupees EPS, Tech Mahindra is still lucrative. So today's stock has appreciated in this kind of environment, and large cap companies are also sustaining at this because NASSCOM has given a good growth expectation for the next year, so that that also fuels here augurs well for the IT companies domestically. And 5% growth we have already seen in large cap companies, so as in Tech Mahindra on the revenue growth part. So we still think that yes, that there is much more scope for IT companies for appreciation in a shorter term period.
Yogesh, Pharma clearly continues to be the flavor of this quarter. What have you made of the kind of buying action we've seen of late in some of the mid-cap names like in Aurobindo Pharma today?
Yeah, Aurobindo post number, it has appreciated today by 9-10%, but I'm afraid we don't have coverage and neutral ratings on that, so we are not recommending there anything anymore. But we have Cipla and Dr. Reddy instead of that, and we are buying that for the customers.
Yogesh, appreciate your time and thank you for joining us.